Welcome to Holistic Accountant Podcast, where we aim to showcase how adopting a holistic approach in accounting and tax maximizes value for clients. Beyond traditional tasks like preparing financial statements and tax returns, a holistic accountant focuses on offering advice that maximizes personal wealth on an after-tax basis. If you enjoy this episode, please consider leaving a rating and sharing it with those who might also benefit. And to ensure you stay updated, subscribe to our weekly email. The link is in the show notes. Okay, today, Mena, I would like to talk about the Australian Labor Party's massive victory on the weekend in terms of the federal election, of course, and talk about what are the implications for business, particularly small business, given their sort of policy mandate, and particularly given that they've got such a significant majority. So we'll take it in terms of talking about some of the points here that, we want to be thinking about at this stage. So, the first one is that, the labour market can be challenging for some businesses. Now, of course, it depends what industry you're operating in, but the stats tell us that around about 80% of new job gains, new jobs created and new employment created was from the non-market economy, which is essentially the public sector. Putting a different slant on it, only 20% of new jobs came from the private sector. So that sort of tells us, that obviously Labor has a pretty strong mandate of on-budget and off-budget spending, and that's creating a lot of employment. And perhaps that can give us a hint of why they won the election so compellingly that they did. If you've got more and more voters that are being paid by the federal or state governments, of course, you've probably won their vote. But for the rest of us in the private sector, that can put a strain on human resources. And, if you are in those sectors where you're competing with the public sector, well, I can only imagine over the next 3 years and possibly 6, that you're going to have the same sort of pressures that you've had over the last 3 years.
Another thing they're targeting is compliance around sort of ATO matters, and they've already put a lot of resources within the Australian Taxation Office, and have already, as you probably would have heard from our previous podcast, that they're already doing a lot of reviews, audits and so forth around rental properties and similar sort of arrangements. But they've also indicated that they're going to put trusts in the limelight. So what they're really going to be focusing on is Section 100A, which basically outlines distributions to people outside of the mum and dad beneficiaries as such. So beneficiaries such as children, parents, cousins, grandparents, and so forth. So what Section 100A basically states is that if you're not actually physically making a distribution to that beneficiary, then the trustee can be assessable on that distribution, basically assessed at 45% or 47%. So it's quite a significant amount of tax. So they've already indicated that they will be governing this sort of legislation quite heavily over the next few years, as well as family trust elections. Now, not a lot of people, when they establish trusts, do family trust elections. We always recommend it. It basically indicates who's within the family group and who you can distribute within the family group and the entities and so forth. And the ATO are putting in a lot of money around focusing on if family trust elections are in place and whether that beneficiary is actually the eligible beneficiary of that family trust.
I had a conversation the other day, Mena, with a client. They asked me about, trusts and will they still be useful to use in the future? And, I probably don't need to remind you, Mena, that I'm a lot older than you are. But they've been talking about changing the taxation of trusts really for the last 25 years, the government has. And, well, that's at least as long as I've been listening to them. They've probably been talking about it a lot longer than that. But the thing is, to change how trusts are taxed is a significant change in law. And that law has been entrenched for hundreds of years around trusts and taxation of trusts. So I think there's always going to be that talk, but this is where I think they're going to play, around those fringes of family trust elections, Section 100A, these sorts of things. So I think trusts are still going to be really useful vehicles to hold and build wealth in and use to manage taxation liabilities. But I guess the point is that there's going to be greater focus, and so it's really important that your holistic accountant is on top of those rules so that you don't accidentally fall foul of them. Okay, the next thing to talk about is the $3 million, let's call it super cap or unrealised gain, taxation on unrealised gains. So this is the policy that the ALP announced at its previous election victory, but wasn't able to get the law legislated in time before the most recent election. And so just as a refresher, what the ALP is suggesting is that anyone that has more than $3 million of super, the excess amount is taxed at 30% instead of 15%. And also included in the net is not only realised gains and income, but also unrealised capital gains. And, taxing unrealised capital gains, paper profits, if you like, is something that really goes against a lot of sort of entrenched law and as sort of people offside, of course. But I think we should see it what it is. It's a disincentive for people to have more than $3 million in a concessionally taxed environment. So, arguably the better approach would have been just implement a cap rather than unrealised capital gains. In any case, it was stuck in this legislation, passed the House of Reps and was stuck in the Senate. As I said, it's expired now. The bill has expired, so they're going to have to reintroduce it. But it looks like we don't have all the results in yet, but it looks like the Greens and the ALP will control the Senate, in which means that this legislation is likely to become law as proposed. So anyone that has $3 million or could project, might expect that they'll have more than $3 million in super, is going to need to do something about it, and perhaps that's another episode for another time, Mena.
The ALP is also committed to extending the instant asset write-off of $20,000 for another 12 months through to 30 June 2026. Now, so what that means is it allows small businesses to immediately deduct the cost of any asset under $20,000, fully depreciate it, so you get the upfront tax deduction. Now, obviously, I don't foresee them increasing this threshold any further given, current inflationary measures and, with what the RBA is trying to do in terms of curtail inflation to lower rates. So at this point in time, it's only 12 months for the 20,000. They might be extended, I think, for another 12 months, but we'll just have to wait and see when they release the budget next year.
The ALP also announced energy efficiency grants. So that's for small and medium enterprises that can access up to $25,000 if they're going to invest in energy saving upgrades. So obviously that's going to really appeal to anyone in a manufacturing business or the like. So that's something to keep in mind.
The ALP also plans to extend fee-free TAFE places and apprenticeships to subsidise sort of skill shortages, mainly in the trades, to sort of assist in infrastructure and housing. Obviously, housing supply is an issue, so they're trying to sort of reduce the cost and put more supply out in the market. They also want to change the definition around casual employment and labour hire practices. So essentially give more power to the employee rather than the employer, which obviously can increase administrative responsibilities and burdens for small businesses.
And lastly, superannuation guarantee is going to rise on 1 July to 12%. So that's the amount that employers have to contribute on behalf of employees. And, it hasn't received a lot of sort of attention really, but essentially the superannuation guarantee rate has increased from 9% to 12% over the last sort of 5 years. That's a 3% increase. Might not sound a lot, but if you have a pretty high wage bill, that's a pretty significant forced wage increase that businesses have had to deal with. And when the commentators talk about wage growth and these sorts of things, often they don't include the fact that, the superannuation guarantee has increased as well. So, but I'm not going to sit here and criticise Australia's superannuation system. It's a great system and it's working incredibly well. There's always improvements that can be made. In any case, the ALP's, I think, keen to continue to increase the superannuation guarantee rate. There's just been some talk around it. I don't necessarily think that's going to occur in the next term, or maybe not even the next period of time. But you can see, that would very much align with their policy direction to continue to increase the superannuation guarantee limit. But anyway, up another 0.5% at the end of this financial year. So there's some of the things that, as a result of that victory that on the weekend that we think small business should be thinking about and considering. Obviously, government spending will remain elevated. Obviously, the coalition was sort of talking about more prudent sort of financial management. Now, that can be good and bad for business, I guess, if you have some public sector clients or revenue from that sector, that's obviously good news for you as a business, but just something we all have to navigate, I guess. So until next week, bye for now.